Hey traders, welcome back to the FX YouTube channel. We had some really interesting price action last week. Downside targets were hit. My higher time frame ideas didn't play out. Let's have a look and see what we can anticipate next. I'll do some analysis on DXY on the higher time frames, then a full top down on EU. I'll break down last week's price action and then look at some possibilities for next week. So let's start with DXY on the yearly time frame. So I brought this up because for whatever reason I went to the yearly just to have a quick look, and I saw that on the yearly time frame DXY looks a little bearish. Created that high way back in 1983. Came down very low, pulled back into looks like a fair value gap, then reversed, created a lower low, pulled back, and as of right now we had a deep pullback into a yearly order block. We've reacted off of it, and for the time being haven't pushed down lower. So it's interesting to see on this time frame that, I mean, technically we are bearish structurally. So I don't want to spend too much time analyzing this. I'll go back to my favorite time frame, which is a monthly, which probably gives the clearest picture of what to anticipate next. So as you can see on the yearly time frame, it's different than what we're seeing on the monthly time frame. It's different than what we're seeing on the yearly. We are bullish. You can see that we've broken structure, created a high, and if we take the fib from the current monthly range, we've nearly come back into OTE. There is a monthly fair value gap here that we filled, and after filling that fair value gap we had a very aggressive reaction out of it, and the next candle is continuing bullish, pushing away from the drawn liquidity. So on the monthly time frame it looks very bullish right now. I was thinking, based on what I was seeing on the yearly time frames, maybe that would shift, but for the time being this monthly candle is going to close next week, and looking at the way it's pushing up, it's very likely it's gonna close bullish, but where will be a nice indication of what to expect, because if it closes above this candle, then the likelihood that we're going to continue higher, it becomes more likely. So keep this in mind. We've seen the opposite since more or less the entire year. I guess it's, well, you can look here. October. Since October, DXY has been pushing down. So that's been the case up until now. But now we may be having a shift. And the dollar, for multiple reasons, is looking like it wants to start to push up again. And in terms of fundamentals, I saw at the Jackson Hole Symposium that they have going on since yesterday, I believe Powell mentioned something about interest is on the rise. And if interest is on the rise, then it's very likely, sorry, not interest, inflation is still on the rise. And if that is really the case, then we may not be done with interest rate hikes. So I believe next week, let me just have a quick look at the calendar because I don't remember offhand. Bear with me 1 second, please. Yeah, we have NFP next week, but not FOMC. Okay, so maybe in anticipation of further interest rate hikes, this is potentially the effect of that, a strengthening dollar. And when that announcement is made, and if the interest rates do increase, then it's very likely that dollar will continue to become stronger. But for the time being, when I look at this, it looks like at a minimum, on this time frame, we should go into the monthly fair value gap, regardless if it continues bullish or shifts bearish. It makes the most sense for the dollar to reach into there, and then if it wants to pull back or reverse, it'll do that from there, or just continue on. So let's go down to the weekly time frame. So weekly time frame, as I said before, we swept all this liquidity. Didn't come into weekly demand, but as you saw on the monthly time frame, filled in a monthly fair value gap. Thereafter, pushing out quite aggressively. So one bullish weekly candle coming out of the liquidity that it swept, pullback that retested it, and then after that, consecutive bullish candles after that. So this weekly candle has already closed, and as you can see, it's closed bullish. So we do have some conflicting biases on the different time frames, but I mean, looking at what we see in the bigger picture, it does make sense that we do see dollar continuing further to the upside. But at the same time, we have hit a lot of liquidity targets. So I wouldn't be surprised if we started to have at least a reaction or a pullback at any time. But for the time being, I'll stick with the bullish sentiment until I see something different. So that's more or less what I wanted to go through on DXY. Now if we switch to EU, again starting with the yearly time frame. So obviously conflicting about with what I was saying on the monthly, but you can see it is bullish. I don't honestly know why we even have this data back here, because the euro didn't even exist at this time, but you can see that it was bullish the entire time, creating higher highs, higher lows, higher high, and now we've pulled back, testing the yearly order block, and thereafter reacting and starting to push up. The yearly candle for the time being is still, the current yearly candle for the time being is currently bullish, but you can see there is a huge wick on the upside. It is coming down, and whether it remains that way or not is a completely different story, because as I said, it's conflicting with what we see on the monthly time frame. But it is interesting to at least look at it in this way, where we pushed up, broke the highs, pulled back into OTE, overshot it a little, had a reaction, and starting to push up. But like I said, whether it continues up or not is a different story. So if we go to monthly next, on the monthly time frame, so monthly is bearish. So you can see we're creating lower highs, lower lows, lower highs, lower lows. And from this lower low, if we take a fib from the last leg, you can see we've come up and tapped OT exactly, and had a huge reaction off of it. And then the next candle, the next week candle, which is already closed, has closed bearish. It hasn't broken down and broken structure, but I'm guessing it's likely to. I mean, there are some mixed signals, and I can see this turning around and continuing up. But if we focus on what structure is showing us on this time frame, it makes the most sense for EU to continue down. And on this time frame, obviously there's going to be some resting liquidity here. But the most logical point is actually this fair value gap that's left open on this time frame for price to retest, either go through and continue to the downside and continue the bearish structure, or react and pull back and potentially reverse from there and continue higher. So let's go down on the weekly now. So on the weekly, as I was saying, ever since last year, we've been pushing down, 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 and then in September, October area, that's when we had the shift and have been bullish all year. So we've been creating bullish structure, higher highs, higher lows in this leg. And as of right now, we've come down. This must be deep into OTE. Yeah, so we've come down deep into OTE. We filled this weekly fair value gap. We swept the resting liquidity. So this resting liquidity was my drawn liquidity. And then after that, we had some reaction. You can see from the wick that was created at the end of the week. But for the time being, haven't really showed any signs that it's going to reverse for the time being. So my guess, as of right now, looking at the way it's coming down, looking at the way the candles are formed, we can expect continuation to the downside. But at the same time, we are at an important area. We've hit our draws on liquidity. We filled the weekly fair value gap. We've come into the weekly order block. It wouldn't be a surprise to start to see a shift in this area for price to either react and come back up higher in the range, or potentially reverse, because as I said, it is bullish on this time frame. We are creating higher highs and higher lows. So if that structure holds, then this will be the area where it holds from, and we have a reaction shifting the structure to push the price higher for either a bigger pullback or reversal. But based on what I said on the fundamentals, I wouldn't be surprised if that doesn't hold true and it continues to push down. But again, on EU, same as what we saw on DXY. The higher time frames are all conflicting. The yearly is let's have a quick look. So the yearly is bullish, the monthly is bearish, and the weekly is bullish. So they're all conflicting with each other. Which one holds true remains to be seen. So all we can do is, just go with the flow. Right now it's bearish. Let's focus on the sells. If we go on the daily time frame, so daily time frame, it was quite messy with this consolidation here, but as you can see, we've continued to drive further down, and yes, it's been really sloppy. You look at the candles with all the wicks on both sides on a lot of those days, so it's been really messy, but it has continued to push down. And on this time frame, on the daily time frame, so as I was saying, we've swept the drawn liquidity, filled the weekly fair value gap. we've come into a daily order block, and again, if it wants to shift and pull back or reverse, it would make a lot of sense for it to happen in this area, or even potentially going lower into the origin. So this is the origin where we really had the first displacement to the upside. So there is a possibility that it wants to come down here, but if you look at it, there's not really so much inefficiency in this area. The inefficiency was up here on this time frame, or on the weekly time frame in here, but nothing so much in this area. A lot of it's quite clean and balanced. So potentially this could be the extreme that it's seeking, and looking for a reaction to shift and pull back, or potentially reverse from here. But again, I'm not going to do that this week and call any kind of reversals. I'm going to more go with the flow and continue to look for shorts for the time being until there's really a reason. I mean a real reason, like a clear shift on the 4-hour time frame, for example, or maybe on the daily time frame, before I really start going big on longs. It makes more sense to focus on going big on the shorts and the continuation. And you'll see when I go on the lower time frames why that makes sense. So let's go to the 4-hour next. So I won't do a breakdown so much on this. I'll save that for the 1 hour. But as you can see, these fair value gaps are actually 1 hour fair value gaps that are very clear and very clean, where price always was attracted to, acted as a magnet for price to come back to, and thereafter aggressively reversing and pushing further down to the downside, breaking structure. Even on this leg right here, we had our pullback to the 1 hour fair value gap. That was actually my target for shorts, but as it was news, it was really impossible to enter unless you just went in with a risk entry, which normally isn't the safest idea, but it would have worked in this case, covering the high, entering on the fair value gap, and taking the price down to the lows. I don't know if it actually broke the lows. I think it was slightly above it. So 7659 here, 7658 here. So it did actually break the low. So it swept the low, and then after pulled right back. So we're right in the middle of the range of that news week, or the news candle. But yeah, as you can see, on this time frame, there's even a refined 4-hour order block that price has tapped into once, reacted off of it, tapped into again, swept the previous low, and once again reacting off of it. So I wouldn't be surprised if we did see a bigger reaction in price pulling back from here. But again, it's more of kind of a risk idea, because as I said, the higher time frame PD rays are being respected. So we look at the fibs on this level, you can see price came nearly into OTE, came into this 1 hour fair value gap and reversed from there. And then once again we look at the fibs here. Let's not use this candle, let's use the one before. So came into created the low and then started the pullback, filled the fair value gap, came into OTE, and then after that aggressively reversed and created a lower low. And right now, if we look at this candle that created a higher high and a lower low, we've already come into OTE. So potentially, if it wants to continue down, doesn't necessarily need to go higher in order to do that. It could just go down from here. And at the same time, I will comment on the fact that we did have an aggressive push up, a sweep of the lows, and potentially there is a chance that we may see higher prices as well. But I'm going to focus more on shorts for the time being until I see a reason to switch my bias. Okay, so on the hourly time frame is where I wanted to do more of a breakdown of the weekly price action. So what happened in this area is we had, you can see it's quite sloppy going up and down, but we created the low, had a reaction with a bigger pullback. So it swept internal liquidity here. So prior to reaching it, it failed to sweep the liquidity, had a massive pullback, and then immediately started to drive right back up until ultimately sweeping that liquidity, coming in to the OTE of this range, the order block here, and then after that aggressively pushing down. And after that, or with this push down, we broke the lows. Sorry. So we broke the lows, and then once again had a pullback. There was a fair value gap that it came back into, and then once again aggressively pushed to the downside. At this point, it swept or had a deep sweep of that drawn liquidity. We actually swept it one time here, but then came lower and then had a really aggressive push up. So this is where I got faked out, because I saw this aggressive push up. I saw the break of this high without realizing that that was just a sweep of internal liquidity coming deeper into the fair value gap and coming right back down, and once again creating a lower low. So the problem I had last week is I had a strong bias on a potential scenario that could happen. So after the sweep of the drawn liquidity, if we have a strong reaction, then from there it's very likely that we shift and push, maybe not to the moon, but at least have a significant reaction, a significant pullback, and potential reversal. So at this point I got into longs somewhere around here, took it up. You can see that there's a fair value gap right here. It's more significant on the 15-minute, so that was filled, and then after that, that's where price reacted off and pushed down. At this point I was still thinking longs. It broke this low and I was thinking, oh, perfect, sweep of internal liquidity coming into extreme. I entered a long here, and instead of going up, it came right back down. So I took a loss here, and as you can see, this was already on the market rollover. So daily rollover was this candle right here, and then this was pre-Asia, where it already started to push down, and then it broke the lows again on this candle, which is an hour before Japan opens. Had a very nice pullback into a fair value gap on, I believe, the 5-minute and the 15-minute, and then after that reacted and continued to push down all through Asia. And then at this point we started to have a shift, and I was like, perfect, time to look for longs. And the idea played out until London. So London came in, it was creating a lot of volatility going up and down, and then after that swept the highs and then aggressively pushed down and then reverse with aggressive push back up. And I was thinking it's come down, broken liquidity. I was looking for continuation, so I went short sometime in here. Not really sure what I was thinking at the time, but the idea made sense at the time, and was looking for continuation, I believe, at the breaker. There was a breaker in this area that it had a nice reaction off of. I entered on the pullback, it tapped me in, and instead of going down, it went up. So when I saw that, I was thinking, okay, this is a sweep, and now it's going to reverse and go up. So I immediately got into longs because after taking me out, it came right back down, and immediately took a long off the reaction of the demand in that zone, took the price up, and fortunately was able, even though this had a really aggressive initial pullback, I was able to hold that trade and eventually hit my TP at OT. So I was targeting, I believe I targeted the 618, and that's where my TP hit before it reversed and came back down. And it went in so quick, I'm surprised my TP actually hit, because it wasn't my final TP. It was managed by Trade Assistant, and many times when price moves that quickly, Trade Assistant isn't quick enough to actually execute the TP. But fortunately it did, so I took profits. I actually had 2 longs in here. So my losses that I previously had were all covered for, so I got all that back. And then when it started driving down, I actually took a short here in a breaker area and took this down. And then I was mostly out of the market until I saw some reaction here, and I was thinking maybe it can continue down. That idea didn't play out. It initially came down maybe 5 or 10 pips from my entry, and then after that it reversed on me. And when I saw the reverse, I was like, okay, it makes sense. It's probably going to go back and fill some of the inefficiency up here, and was actually in a long just to cover my previous loss, and then I was out. And then after that, it was way too late in the day to even consider, what was happening next. So I just let it go and figured I'd come back later and have a look to see where we ended the day. So as I said, after this aggressive push down, we've already come back up into OTE and had a nice reaction off of it. So my assumption now is go with the trend until it ends. And as we've been bearish, I would like to look for shorting opportunities. So continue to look for shorts in this area, assuming that this high holds. It may get swept before it comes back down. That would be logical, especially at Japan Open or London Open. And if it does in fact go down, just look for continuation to the downside until the lows are taken. But I did see something interesting on the 15-minute. Yeah, so the 15-minute is quite interesting to me, mainly because a lot of times we have, those really erratic movements before we actually have a reversal. And this, in my mind, even though the higher time frame PD arrays, bearish PD arrays are holding, and it makes sense for price to continue down to the downside, it could also be the first sign that, hey, maybe we are going to shift and reverse. I mean, just look what happened here. We created this low, had an aggressive move out of it, pushed up, the news triggered a huge wick to the upside, subsequent sweep of the lows to the downside, and instead of pulling back and consolidating here and continuing to the downside, it went up. Why did it go up instead of continuing to the downside? Maybe there's a reason why it didn't go down. Maybe there's a reason that it wanted to push up instead. So yes, it reacted off the supply again, the OTE, and it's already coming back down. But if come Monday it pushes down a little deeper into, say for example, had it actually already reacted off of it? So we have this unmitigated 5-minute demand zone right now that it already hit and reacted off. It wouldn't be a surprise for me during Japan to consolidate in this area at the beginning of Asia or pre-Asia, and then during Asia Open maybe start to take out some of the range highs, and then when Japan opens, comes down, sweeps this low deeper into demand. I didn't look, but maybe there's something on the 5-minute. Oh, 5-minute it hit. There's actually fair value gap on the 5-minute here. But for this idea to make the most sense, I would like to see this as a breakaway and price to hold at this level and continue up from here rather than coming deeper, because if it did start to come down deeper, I would just think it's going to continue to the downside and break the lows. But on the 1-minute, yeah, so on the 1-minute, it looks like it may have been mitigated already. We have 1-minute fair value gap with unmitigated 1-minute demand here. So potentially yeah, that works out. So you can see here on the 1-minute, we are using this as our unmitigated demand, which created a fair value gap. With this displacement, it's come into the fair value gap and retested the fair value gap, but not the actual demand itself, so in the extreme. So potentially, as we've already, well, this week you can't really say much about that because that happened 1 minute before the market closed. So just ignore that. The idea here is that we do come deeper. We've already swept that as internal liquidity. So that's already been swept. So the idea here is that we come back down either deeper into this wick or sweep the wick into this demand and potentially look for a reaction off there. And if we do get a impulsive drive to the upside after tapping that, then start to look for longs from there. And worst case scenario, you get a pullback during the Asian session, and if we don't get continuation in London, then just close a long and start to look for shorts. So yeah, we are in this range right now, right in the middle. So the idea here is to see which one breaks and see which side we get further continuation on. I am bearish. I would like to see price continue further to the downside, but at the same time, as I mentioned on the hourly time frame, we have come into an area where it does make sense that we could reverse from. We've already had an impulsive reaction off this area. So we had our first drive up, our sweep of that low, and then instead of coming down lower, we actually went back into the middle of the range. And because of that, there is a chance that maybe this is the area that we could start to shift and push up for a bigger pullback. Either pullback higher into the range. I don't think I have it on my chart anymore. Right there. So right here we have inefficiency. Damn it. We have inefficiency that was left behind. So that would be, I mean, if we really had a strong drive up, that would be my target where I would likely close trades if the price reached that level. And yeah, so like I said in previous videos, and it's still the case today, we are still bullish for the time being. Yeah, and one other thing that's really interesting that I'm seeing right now, so I just want to align this as accurately as I can. If you look at this, we're creating trendline liquidity. So retailers would see this as, okay, price should bounce from here, but smart money traders are more inclined to think that, okay, if we have a clear line of support, then what's more likely to happen? We'll see manipulation through that support before we start to see a shift and push higher. Yeah, but it's really interesting that price stopped exactly on that trendline liquidity. Okay, well, anyways, going to what I was saying before. For ideas from next week, focus on the shorts. The shorts make more sense for the time being, unless this initial reaction is the start of a shift that pushes price up and breaks this high. And don't be tricked by a break of this high, because a break of this high could just be a liquidity grab to come closer into, say for example, this order block, or this order block where we have a fair value gap that's partially mitigated. Maybe price wants to come and dig deeper into that before reversing. But once we start breaking a second level of structure, and this clear high, yeah, this is a very clear high. I mean, once we start breaking those structure points, then it's time to think, okay, now we should probably start focusing on looking for longs instead of focusing on shorts. I mean, intraday, you can make money trading either direction purely based on timing and where we're at in the current leg of structure. But if you want to trade off the higher time frames and hold those trades, then we're going to have to see some major levels of structure broken before we can get into trades and expect to hold for multiple sessions. Yeah, but it could be interesting if we do start to see a shift and breaking of this level and potentially this level, I mean, once I saw this broken, unless it comes into like an open fair value gap and reacts and pushes down, I would start to look for longs. But a break of this one, and definitely I'll start focusing on longs at that point. But a break of this one, like if we get a week into it and maybe another week into it, I'll probably short it. Yeah, and you continue to see if price comes down. Like I said, the trend line liquidity obviously makes a lot of sense. So using that as your TP to see price come into for shorts, to sweep that liquidity, and maybe deeper into this demand if it wants to reverse. But like I said, more likely to just continue down for the time being until we see a real reason to start to think that the market is shifting. But looking how long we've been pushing down, wouldn't be surprised if at any moment we start to see a pullback. I mean, whether it reverses or not is a completely different story, but a pullback from 4-hour demand or even daily demand makes a lot of sense. And again, targeting this fair value gap as a minimum that you would like to see price come into, and thereafter potentially reversing and come back down. If structure holds on this time frame, then ultimately we should break this high. But for the time being, I'm not so optimistic in seeing that. We're going to have to see some really some real strength in the euro for that to happen. But like I said before, think back about what I said about the fundamentals. Inflation is increasing based on what Powell is saying, and because of that, the interest rates are likely to go higher. And if the interest rates do go higher, then that means a stronger dollar. So fundamentals are really against this idea now, and when the fundamentals align with what price is showing us, it makes more sense for me now to focus on the shorts on EU until there's a real reason to start to look for longs. And as of right now, there's no reason to start to look for longs. So go with the trend until it ends. Okay, well anyways, that sums up the analysis for this video. I mean, I don't really have so many ideas for trading next week, other than it's more likely to continue down than to go up, but it would be logical to see a reaction and pullback and potential reverse from this area if we start to see signs that that is in fact happening early next week. Okay, so as I always say, if you guys are willing to share your thoughts on the market and your ideas in the coming week, I would love to see some comments about that. Otherwise, I'll see you for the next one. Peace. Hey guys, it's me again. I was just thinking something about a potential bullish scenario that we could possibly be seeing in this range, and just wanted to add a Wyckoff flair to it, because that's what I'm seeing right now, a potential Wyckoff schematic building right now. And if that were the case, for those that are familiar with Wyckoff, this right here could be our preliminary support. This right here could be our automatic rally. this right here could be our secondary test, our selling climax. And reason why selling climax is because it manipulated the lows. So it manipulated this range, creating that selling climax, and thereafter showing signs of strength. And then what happened after is price drove down, it swept the low, but instead of pulling back and continuing down, it actually pushed up higher, which I wouldn't have expected if this was really bearish. Seeing how it drove down, yeah, maybe a pullback and then continuation, but why not a little consolidation in this range before the next drive down? Why did it come back up? There is some strength in there. So in this scenario, in the Wyckoff schematic scenario, geez, I'm using this new mouse. It's really tough to navigate sometimes. This would be our secondary test. This could be some more signs of strength, and I'll simplify as much as possible what to look for, but ultimately for Wyckoff, what you want to see is price come down aggressively, break the lows. So this is our manipulation candle. Thereafter, immediately push up, create some kind of a V-shaped recovery, come back for a test, and after continue to the upside, consolidate a little, which would be our last point of support, and thereafter continuing to the upside, once again showing our signs of strength. So if I label this really quick, this right here in Wyckoff terms will be our spring, and this will be our test, and this would be our LPS, which is last point of support. So if we do have a bullish scenario in the works, this is what I would expect to see. I would expect to see a sweep of the lows, which is our manipulation, creating in Wyckoff terms our spring with immediate reaction out of it. So this should be a quick in and out with a V-shaped recovery. There should be some internal liquidity that's created here, and on the lower time frame you should have a lower time frame shift, and I'm talking about something like 1 minute. And then once you see that, and then the next pullback would be where you would enter off of potentially some sort of fair value gap or something that's significant, or you could enter off of, and then once you see a reaction off there, just enter and cover the lows. Yeah, cover the lows to take it up, because if this is in fact some sort of a Wyckoff schematic in the works, then you can expect a significant reaction to the push to the upside. I'm not going to give targets, but like I said, if it does shift from here, then we would expect to see breaks of structure at multiple levels, and at minimum we would like to see a pullback. And if we see a pullback, I think our targets to reach for would be this daily fair value gap that's left open. And then if it does continue, then great, keep some of the trade open, and this could just go to the moon. But anyways, that's what I'm thinking. If we do see a shift in this area, what you would want to look for is that last manipulation to clear that liquidity. And if you see an aggressive reaction out of it, then that's a signal to start looking for pullbacks to enter longs. Okay, anyways, I hope this edition is useful in case we do see this bullish scenario play out. I honestly don't think it's likely. I think it's going to continue to the downside. This is a big if. So if we do see something like this form, a manipulation with immediate aggressive push out of it, then this could be a Wyckoff. And if it is a Wyckoff, just look for that pullback to enter along. It'll be worth the risk. Make sure the low's covered, and it should go to the moon after, at least short term, to break some of these areas of liquidity. And if it does continue up, I think the drawn liquidity will be this daily fair value gap, as I said. Whether that happens or not is a completely different story. It's just something that I could see as a potential scenario that could be a very profitable trade if it does in fact happen. Anyways, hope this edition was useful for you, and I'll see you for the next one. Peace. Hey, you made it to the very end. Thanks for that. If you could do me one more favor and click the like button and subscribe if you haven't already, it'll allow the YouTube algos to kick in and help this channel grow. Thanks again. Cheers.